Today, we are sitting with one of the mortgage brokers that have worked for many of our clients over the years. This is Keith Crosland from the Mortgage Connection. He is going to answer a bunch of questions that most of you always have when you want to buy a house. Like, what do I do? Where should I start? And where we always say where you should start is right here. So you've been doing this a long time, right?
I have been doing this a long time.
Yeah,
yes.
We didn't just find him.
No.
Actually, I think our first mortgage with you was with Scotiabank.
Yeah.
Maybe almost with you, it was more than 10 years ago.
That's about right.
Yeah.
So I moved into the mortgage broker space about 2 years ago. Great opportunity to offer more products and more services to our clients. But before becoming a mortgage broker, I did work as a mortgage specialist with Scotia for about 10 years. So I think 2014 or so was probably our first mortgage together.
So Keith, my question, most important question for you is, what are the first steps that a buyer that wants to buy a house, what are the first steps they should take in getting approved or pre-approved for a mortgage?
Yeah, that's a great question. It's great to know where to start, and thank you for the opportunity here to chat with you guys. So, but what it is you're looking to do for a new purchase, are you looking for a townhouse or a mansion, buying a rental, a primary residence, a secondary home for family? So there's lots of options and different scenarios that we'll talk about on the phone. We'll also then move on to gathering some financial information. So talk about, what you have coming in for income into your home, what you have for outstanding debts, assets, liabilities, the makeup of your finances. I'll take that information away, ask for some documents to confirm those details, so pay stubs and T4s and letters of employment, and then we'll run some numbers and get back to you with the pre-approval amount. And so yeah, first step, give me a call.
And there's not only that, what I want to add here is if you already own a house and your mortgage is coming for renewal and you're terrified, this is another time to talk to Keith as well.
Yeah, there's a lot of fear out there right now with interest rates, and we're coming into the period where hopefully you're able to lock in a fantastic COVID rate, around or under 2%. But if you took a 5-year term, that term is coming up either this year, next year, or the year after. So give us a call. We can talk about some different options for renewals, maybe refinance, put some other debt into your mortgage, find a way to make your monthly payments more manageable moving forward.
Good.
I'm with Dustin Moss today with Mortgage Connections. Hi, Dustin.
Hello.
How are you?
I'm really good, thanks.
Good. Just wanted to ask you a few questions, such as, first of all, what's your experience as a mortgage broker? It's a mortgage broker, right? Not a lender?
Correct, that's right. Yeah, so as a mortgage broker, I've been over here for about 2 years.
Okay.
Came over from Scotiabank, where we were acting as mortgage specialists for the bank for about 7 years, which is a little bit different than brokering, of course, because you're just representing one lender, where now we've got access to a bunch.
Perfect. And you and Keith are a team?
That's right.
Okay.
Yeah. We've been business partners for about 9 years now, 10 years or so. And then we've got an assistant that we share as well to round out the team.
Okay, great. So you're kind of like Glenn and I. You're a team and you share the duties. How does that work as a team for you guys?
Yeah, it's exactly like that. The benefits are being able to deliver better customer service to our clients than a lot of individual brokers. If somebody goes on holidays, we know we've always got coverage, somebody that we can trust to talk to our clients and help out. And then sharing ideas, counseling each other, really to dig down, do the research and get the best solution for the client. So sometimes there'll be something that I've seen or dealt with in the past I can help Keith with, something that Keith has seen, he can help me with. So it just brings a lot more depth and knowledge, I think, to our clients.
Yeah, 2 is better than 1.
Yeah.
For sure.
So when you said that you would take a bunch of information from them on the phone, what exact documents are you looking for from a buyer as far as qualification?
Yeah, the thing to take away is that it's going to vary depending on the applicant and on the buyer. So great example, if you're a part-time casual nurse, really common profession here, We're going to ask you for different documentation than we would if you own a steel company or you're a teacher that's a full-time permanent position, or there's such
Or a
wide,
hairdresser.
or a hairdresser. Exactly. There's
We've
such
had that before where they claim a lot of tips, and that's all how they
That's right.
do their taxes, I guess, right?
Yeah, commission sales versus salaried employment. So it really will depend on everyone's situation. It's tough to sort of give you a list of exactly what we'll need. What I like to advise my clients though is anything you tell me in an application, we're probably going to have to verify through some sort of paperwork. So if you tell me you have $50,000 for down payment available, we're going to have to show that you have that through 2 or 3 months of bank statements.
So what you're saying is, like, as far as documents, I would say, first of all, proof of ID, proof of who you are, right? Then your tax assessments for, do you take 2 years, 3 years? What do you, depending on the applicant, probably.
Depending
again,
on the applicant,
depending how long
yeah.
you've worked at a certain job.
Yeah.
And what else could we throw in there?
Normally we'll look at something like a recent pay stub if you are an employee receiving pay stubs. If you've been at a company for more than 2 years, or even been in the same field, let's say you're a welder and you've changed positions over the last 2 or 3 years, but you've always been a welder, we may ask you for your T4s. So just the single slip that you get at the end of the year. We don't often need full tax returns, which is nice because tax returns are a lot of paperwork. A T1 general tax return, which we do require in some cases, but not all, can be up to 30 or 40 pages of paperwork. So we'll typically ask you for the least amount we need to be able to do our job and to
And
get
as you
an
need
effective
more,
approval.
you keep adding
That's
more documents
Yeah.
if the underwriters are requesting that, right?
That's right.
And I know this from experience.
Sometimes we'll get a document and it's almost like a string on a loose string on a rug, and we'll pull at it and okay, well, based on this, now I need to ask you for this. So we'll do our very best to get a complete list up front, but it is very common that we'll have to ask for more through the process.
So one of the things that we notice when we get a potential buyer is the first thing they want to do is they want to run out and see homes. And what we explain to them is when you see a home priced, for instance, in say 300 or 400,000, those homes will vary so much, right? So we wanted to know what kind of obstacles for getting an approval, or what's the approval process for that?
Yeah, absolutely. It's a really exciting time, and so I get it. Like when clients, they get the idea that they want to go buy a house, it's very exciting, and that's the first thing they want to do is let's go look at
You want
houses.
to jump in the car and go see.
Exactly. Show up at some show homes,
Yeah.
fall in love, write an offer,
Mhm.
and then they find out that, oh, I can't actually qualify for that house.
Exactly.
Or I can't, in the worst cases, can't qualify at this time for anything at all.
Yes,
And it's heartbreaking. It sends you on like a roller coaster of emotions, and we have to deal with it all the time.
exactly.
Which I'm sure you guys
Yes, we
you know,
certainly do.
too. So that process really should start with talking to your mortgage broker to make
Exactly.
sure that you can qualify for something
Mhm.
and get a very specific range of property values that you should be looking at.
Mhm.
It'll help to determine even the type of house, obviously, because I mean, if you're in the Edmonton market, certain price points just aren't going to get you into a single family home. Maybe you're looking at duplexes or townhouses or condos. So it's always
Yes.
best to start chatting with us. And then we do a fairly rigorous process for the pre-approval. We actually will underwrite the deals the best of our ability up front. And so we'll talk to the clients about their assets, their liabilities, their income, and we will collect, documents up front. And that gets missed a lot. Clients that'll go to the banks, for example, where they're dealing with somebody who's not experienced,
Right.
they'll just ask very minimal amount of questions,
Mhm.
and they type it into a piece of software and it spits out a number.
Exactly.
And if they haven't done any digging into it, a lot of times that'll blow up when you actually get paperwork to back it up. It's not that people don't know what is going on in their lives, but they don't know exactly what those documents are going to show sometimes and how it actually relates into a mortgage application.
For sure. For sure.
How long is your process for pre-approval? I know I've had some clients say that I'm going to go to my bank and 2 weeks later they're still waiting to get an appointment at the bank, or the bank is working on it and there's a pile of papers that deep. So I know there's some really good banks out there as far as, you know, individual people that they can see that are really, really good. But if you're just walking in as a regular customer of the bank, it's a long process compared to yours. And tell us average time to get like a green light to go shopping for a house is about what?
Average is usually 1 to 2 business days. Now, normally that will depend on how quickly I can get information from the client I'm working with. If they're willing to get on the phone right away and give me the
if they have all the documents.
If they're able to get on the phone and give me all the information they need and get me all the documents I request, normally once I receive the documents, it's usually 1 to 2 days. Now, there are instances, Glenn, of course, where maybe someone's in a bit of a unique financial situation, doesn't maybe fit exactly into the box that the lender likes. On those ones, we'll take the extra step of phoning a couple lenders, trying to find a solution, make sure that what we want to do is going to work. So those may take a little while, but the most important thing I think in mortgages is communication. We'll let our clients know, hey, you know, because of this and this, we're going to talk to a lender. Might take them a day or two to get back to us. I'll get you an update by the end of the week. Or one of the complaints I hear from a lot of clients who just walk into their bank is, not only have I not got an update, I don't even know where we're at in the process. I don't know if they've started it. I don't know if they've looked at it. So not to say there aren't some fantastic
frustrating because
bankers,
the house they wanted is already pending or sold.
Exactly. Yeah. So
good. Thanks.
Now, with a condo, there is condo fees, as some people know, and they vary in range, like in prices. Some have inclusions of utilities and some do not. But how does that affect a approval process? Like, say if they are approved for, say, a $300,000 mortgage, but now we're getting into condo fee. How does that affect their approval?
Yeah, absolutely it does. So, and that's really where we want to start talking to them early too, is to figure that out. Because if they're looking at houses and we pre-approve them for a house purchase, great, everything works out. But if they all of a sudden start looking at condos and you've got something with a big condo fee or additional utilities or extra costs in there, those monthly costs do bring down what they'll qualify for mortgage.
Correct.
Yeah.
Okay, great. Thank you.
Is there any upfront fees or costs to an applicant? How do you get paid when an applicant is working with you and you get them a mortgage?
Yeah, great question. So one of the really common, misnomers about working with the brokers that we do charge fees. In 95% of our cases, that is not the case. There are no fees to use my services. I am compensated by the lender that we eventually place the mortgage with. So as a broker, I've got usually 10 to 15 options for clients that are prime clients. They have good credit, good income, they're buying well within their means. And I have different options to go to for lenders based on rates or products or services. Ultimately, I'll always put my client with the best solution that I can find for them. However, I'm going to be paid by that lender that we eventually place the mortgage with, so I don't need to charge my clients any fees.
Unless it's dinner.
Unless it's dinner.
Or whatever, or a nice thank you gift.
I'm an Oilers fan,
yeah.
No, of course we don't expect
Oilers
anything
ticket.
like that.
No, just kidding.
That's what my realtors are for, no.
For approvals and credit scores, what is like a normal credit score that you need to be approved for a mortgage? Because that probably is very important to make sure you have good credit.
Yeah, it's one of the biggest pieces of any credit application, especially mortgages. And there's a lot of misnomers and a lot of misinformation out there about it. People really get hung up on the score a lot.
Right,
and
including me.
Yeah, and it really is just a piece of the picture.
Yeah.
I mean, the credit bureau system does its best to kind of take a bunch of information, a bunch of input, and come up with the rating to kind of assess, financial responsibility or somebody's history of dealing with debt. But it's not a perfect system. And it's only as good as the data that's entered into it.
Okay.
And it does miss a lot of pieces sometimes. So what we're really looking at, the score is important. To give you an idea of a range, it runs from like 300 at the bottom end to 900. It would be like the perfect score, which is tough to attain. We've only seen a few in 10 years of lending. They do exist out there, but most of the population will fall in the 600 to 850 range.
Okay.
Is what we see. And then really to get into qualifying for mortgage loans or qualifying for mortgages in the top range of things, so best rates, easiest approvals, that kind of stuff.
Yeah.
You really want to be in the higher 600 range, 650 and up from there.
Hmm.
That being said, we do have lenders in situations where we can lend quite a bit below that.
Okay.
It's short. It creates a different sort of a risk profile for lenders.
Right.
So we'll shore that up if you're able to put a little bit more down payment in, getting to the 20%, 25, 30% in some situations. Or if you've got a home where you're refinancing and it's got a lot of equity in it, it's good collateral, we can do loans like that at much lower credit scores. So there's not a simple answer. It really is call your broker, have a chat about it. Yeah, call us. Yeah.
However, there are going to be some clients that maybe don't fit in that box. So clients with bruised credit, maybe
Didn't pay Columbia House.
didn't pay. Well, that is less common these days.
You're probably too
but-
young to know what that is. But anyways,
Okay.
some of you know what Columbia House is. 10 records for $1,
Oh
and
my
you couldn't pay
goodness.
the $1, but that screwed your credit. That's
Yes.
okay.
So we have options for those clients.
Yeah.
Just because the banks say no, there are different lenders. Some of those lenders we do charge a fee. My commitment to all of my clients though is that you'll know well in advance if one of those fees is going to be involved. And like I said, for 95% of my clients, that's not an issue.
And the key thing I heard him say is your credit score, right? So you pretty much have a good idea if you have a good credit score or not. But if you think you've got bruised credit, don't think that you can't get a mortgage. Let him look at it. And there's some ways around it. Just like a river will take the path of least resistance, but if you block that, the river will just go around it, and that's what he does. He finds a way to get it done.
If you have a higher credit score, do you get a better rate?
Yeah, so in some instances, kind of to a degree. So
Okay.
if you're in the higher range, if you're 700 or higher and your actual credit history, that's a big part of it. We talked about score, but
Right.
the history in there, we want to see a few years of managing credit and a
Okay.
couple credit products. So a couple credit cards, a credit card with a line of credit, or vehicle loan or student loan sometimes. They really do look at that history. And so if you've got a good history and the score is a little bit low, we can still sometimes mitigate that.
Okay.
If you're in the range of about 700 and up, you're gonna that's a strong enough credit score really to get access to the best rates, best approvals.
And that's what we all want.
It is what we all want, yeah,
Pay that mortgage down quick.
absolutely. But if you compared like somebody with a 750 to an 850,
Yeah.
they're all gonna still qualify for the top rates.
Okay.
So nothing really
Great.
changes until we get into the lower range, maybe under the 650, 600, where we've got to work with different lenders.
Okay.
And again, they'll look at doing those loans with a little bit more down payment, and they shore up that risk to them on a lower credit score by
Okay.
charging a little bit more on an interest rate.
When a person is qualifying for a mortgage, you take all their credit history, you take all their income, but there is a minimum payment. There's insured mortgages, there's conventional mortgages.
Yeah.
Can you explain what the bare minimum that they need and what you'd always recommend them doing if they have the means to do it?
Yeah, absolutely. So for most homes in Canada, and especially in the Edmonton area, the minimum down payment required is going to be just 5% of the purchase price. That's going to apply to any mortgage or any house you're buying with a value of less than $500,000. If you do get into the higher price ranges between $500,000 and $999,000, they changed the criteria a couple of years ago. The government wanted people to have a little bit more skin in the game in those higher price ranges. So they bumped up the minimum down payment where you need 10% on any amount over $500,000. So if you're buying a house for $600,000, you need 5% of that first 500, which is $25,000, and then 10% of the last 100,000, so a total of 35,000. The other really important thing to talk about, though, in Canada that affects most mortgages is default insurance. So this is often referred to as default insurance, CMHC insurance. It's often called in the news as well. There's actually 3 providers. CMHC is only one of them, but the 3 of them are, for all intents and purposes, very similar. They all cost the same, which I think is most important. The way default insurance works actually is it's an insurance policy that the borrower has to pay for in the mortgage. So you pay a premium that gets added onto your mortgage, but the insurance itself insures the mortgage against default, so against the inability to pay and being foreclosed.
But it protects only the lender.
It protects the banks, though.
purchaser.
That's right. So you normally wouldn't go out of your way to take default insurance if you don't need it.
But they force you to take it.
They do force you to take it. The one benefit default insurance has, in my opinion, for buyers is it prevents you from needing to save 20% down payment. Without default insurance in Canada, every buyer, under the way the rules are written currently, would require a down payment of 20%.
And that's
So
a lot of money.
That's a lot of money on
Unless you have
500,000.
an existing house to sell or something like
Yeah,
that. with some good
rich
equity.
uncle
Yeah.
or yeah. So it is more difficult to buy if you needed 20. So the benefit to the insurance is you can buy with significantly less. The downside is there is a cost, and you're basically paying for an insurance product that doesn't necessarily help you as a buyer. It's more actually in favor of the lender. How do you get around default insurance? Well, we've referred to it a couple times, but you need to put down 20% or more of the purchase price. We'll often see this more in people buying their second and third homes where they've built equity in a house, and now they're gonna sell it and get some
And they're
proceeds from
covered,
that.
yeah.
They may also receive a gift or an inheritance from family. Maybe they got, a fantastic job and excellent savings habits. So we do see mortgages with 20% or more. But for first-time home buyers, most of our buyers are 5 to 10% down.
A person who is relocating here from another country,
Yeah.
how is their credit checked if they don't have something like where you can go and get a letter from an employer that they just left a job at or whatever? I know that's becoming a more
It's a really
common
big topic now.
Yeah. So if you can just give us a little bit on that, I know it's a little bit in detail, but just to give us some idea how that works.
Absolutely. Yeah. So generally, it's really tough to do anything when you very first get here.
Right.
Coming from another country, you've got to get settled. Typically you'll find a place to rent, and you'll get set up with a phone and probably a vehicle, insurance, and stuff like that.
Right.
So typically we're talking to clients that are maybe been here for 6 months or a year. And then we can start to shore up that shortened credit bureau
Okay.
with other components.
Right.
So for example, we'll ask clients to get a letter from their landlord that says they've
Okay.
been renting for a year, they've paid their rent on time. We'll get bank statements to back that up. We can tie it into phone bills that they've paid on time
Okay.
for a year, utility bills, things like that they're not actually going to show on the credit bureau, but they do reflect and show financial responsibility.
Okay.
So short up with that.
Great. That's excellent.
And one kind of final thing that I want to ask you, there's always closing costs to buying a house, not just your 5% down. There's legal fees, there's maybe deposits on utilities if you hadn't had those with the service provider like power and gas and water. But there's also like your home inspection. How do you make sure that that buyer has all of those extra dollars to make sure that when they move into the house, they're not eating Kraft dinner for a month?
Absolutely, yeah, it's a great question. We're actually required by the regulators and the banks to verify that clients have a little bit of extra money over and above just their minimum down payment. Now, the amount you're required to verify does vary with some of the lenders. The standard is between 1 to 1.5% of your purchase price that we have to show on deposit. Some lenders only require us to show that you have enough to pay the lawyer, because the argument is some of those other expenses are optional. If you don't turn on your cable the day you move in, it doesn't matter. But if you can't pay your lawyer, you're not getting keys and the whole transaction can fall apart. So it will vary depending on the lender, but that's our job, to help educate our clients based on the rate and the product and, you know, which lender we feel is the best fit. One of the things we'll factor in is how much money do you have? Can we satisfy those closing cost requirements?
Excellent. Thanks so much.
Thanks, Glenn.